Hello, I'm Jordan Marks, your San Diego County Assessor, Recorder, County Clerk. And today, I'm here to help you and your family grow your generational wealth. And we can do so by saving you money on your property taxes. The Proposition 19, Intergenerational Exclusion from Reassessment, or as we more commonly know it as the parent-to-child transfer, was passed by you, the voters. This was done so to prevent you from being taxed out of your family home when it passes between generations. It allows you to transfer a principal residence, your family home, and its low assessed value between parents to children or grandparents to grandchildren when the parents are deceased. However, it also included a statutory limit on how much can be transferred. And today, in this video, I'll explain to you what that looks like. But before we get started with Prop 19, you need to first understand Prop 13. That is the basis for our property tax system here in California. Prop 13 was also passed by you, the voters, and it created an agreement between you and the government. And that agreement said, I, purchaser of a property, agree to pay 1% of that purchase price in a fair and open market transaction for as long as I own the property. And that amount, or what we call the base year value, is limited to increasing up to 2% per year. Before Prop 13, your taxes would increase every year as the market value of your property increased. So, the market kept on going up, and many families were worried they could no longer afford their property taxes and that they would be taxed out of their homes. But Prop 13 created an affordable property tax system because now you can predict your property taxes. And because you can predict your property taxes, you could budget for them. That is the beauty of Prop 13 and how it keeps your property taxes more affordable here in California. Now that you understand how Prop 13 works, let's get back to Prop 19 so I can show you how you can transfer that low Prop 13 value along with your family home. Also, I always recommend, above what you learn here today, that you and your family should consult an estate planning professional about your unique situation. This is to ensure you're taking full advantage of the tax planning benefits available within the tax code when transferring your family home. Okay, first, we need to look at the property's date of transfer. The Prop 19 parent-to-child rules apply to transfers on or after February 16, 2021. The date of transfer is generally the date that you were sold or gifted the principal residence, or the date your loved one passed, even if the property is held in a trust. If your date of transfer was prior to February 16, 2021, Proposition 58 would apply and the rules are different. I would recommend you contact my team of property tax experts so we can help walk you through those rules and take care of you. Okay, now that you've determined that the Prop 19 rules apply to you, here's what you need to know in order to qualify for these property tax savings benefits. First, we need to confirm that the parties involved qualify for the Prop 19 family transfer. While this is known as the parent-to-child transfer, it can also be the child-to-parent transfer. So let's say Taylor Swift bought a home 10 years ago and it has a very low assessed value, and she wants to gift that home and its low Prop 13 assessed value to her parents. What a great kid. She could do so using the Prop 19 family transfer and help shake off some of those taxes. Second, we need to make sure that the property qualifies for the Prop 19 transfer. This benefit only applies to properties that are the principal residence, and it has to become the principal residence of the parent or child moving into the property. Just a reminder, the principal residence is that place that you tell the IRS is your home. This next part is key. Once you have moved into the property, the Prop 19 benefit only remains with the property as long as it stays your principal residence. If you ever move out of the property or use it for a commercial purpose, the benefit is removed and the property taxes will increase going forward. But don't worry, this does not apply to home offices, if you're renting a room to a foreign exchange student, because in both cases, you still live in the home as your principal residence. If the property being transferred, though, is a second home, a rental property, a commercial building, or anything besides your principal residence, then it unfortunately does not qualify for the Prop 19 benefit and it does get reassessed upon transfer. Third, and this is a very important step, The transferee, that's the one moving into the property, has 1 year to file a homeowner's exemption. A homeowner's exemption is a form you file with my office that declares that the property is your principal residence. And it also saves you $70 off your property taxes. It's great. It's very important you file a homeowner's exemption with my office within 1 year of the date of transfer, because even if you meet all the other qualifications, my office cannot provide you this property tax relief until you file this form. The Prop 19 has a very restrictive 1-year filing requirement of the homeowner's exemption, and it starts counting 1 year from the date that your parents sold or gifted you the property or the date of death, even if it's held in a trust. If the form is filed after the first year, we unfortunately can only provide you prospective relief going forward. You'll be responsible for paying the higher property taxes until you file your homeowner's exemptions form. It's worth noting who and when you can file the homeowner's exemption form. This is because it can be confusing, especially for families that are in probate, have the property in a trust, or you just haven't decided which family member is going to move in and make it their principal residence. I say, when in doubt, fill it out. And that's because the law says if you intend to move into the property, you can file that homeowner's exemption. And that helps us preserve your lower property taxes. My office is fully committed to helping you and your family achieve more affordable property taxes, but we can only do so if you file that homeowner's exemption form within the 1 year period. And finally, to receive this benefit, you actually have to apply for it. We need you to fill out the Prop 19 parent-to-child transfer application with my office. This happens to be one of our more complex forms. But don't worry, my team of property tax experts and I are here to assist you, especially in those cases where you may have recently lost a loved one. We want you to know that we are here to help you. In fact, I launched a Navigating Loss Ambassador program specifically to assist you and your family when you lose a loved one and help you transfer that piece of property that left you, that wonderful gift. We know this process can be difficult enough, but we are here to walk you through it and make it easier for you in your time of need. Before we dig into this application, I want to explain to you the statutory limit of $1 million of market value and how to calculate your estimated property taxes using Prop 19 benefit. And don't be scared of the math. I'm an attorney and even I can do it. To understand if your taxes are going to go up or stay the same under Prop 19, you first need to understand what is your cap. If you're below this cap, your taxes stay the same. If you're above the cap, your taxes go up. And I know what you're thinking, Jordan, how do I calculate my cap? Don't worry, it's easy. To calculate the cap, you take your parents' net taxable value from their last property tax bill and add $1 million of market value, and boom, that's your cap. So, in our example here, the net taxable value is $500,000. And you add $1 million of market value to equal your cap of $1.5 million. Now, if the market value of the property is below the cap, or in our case, below $1.5 million, then the taxes stay the same. Now, how do you know the market value? That's easy. It's whatever your realtor tells you you could sell your property for in the market. If your realtor says you could sell your property for $1.2 million, which is well below your cap, you should feel safe knowing that your taxes will remain the same as your parents'. Now, what happens if my property is worth more than the cap, or in our case, above $1.5 million? So let's say the realtor says to you, oh, I could sell your property for $2 million, and that was based on the date of transfer, which, just a reminder, the date of transfer is the day you were bought or gifted the property, or it's the date your loved one passed. So let's say in our case, the market value is $2 million. You deduct from the market value, $2 million, your cap, $1.5 million, and that difference equals $500,000. That is what we call the excess. That excess, or $500,000, is added to your parents' original net taxable value, and we combine them together to equal your new assessed taxable value, which now becomes $1 million. For estimating your property taxes, I always recommend you multiply your assessed value by 1%. So your parents' estimated tax bill was 1% times $500,000, or $5,000 a year property tax bill, and now your new estimated tax bill will be 1% times 1 million of assessed value, which equals $10,000 a year property tax bill. Of course, this does not include bonds and indebtedness. Those are the other items we use to calculate your final property tax bill. But I still recommend an estimation times 1% because your property taxes vary depending on where you live in San Diego County. But this should give you a very good estimate of what to expect in your future property tax bill. Lastly, because appraisal is an art and not a science, I highly recommend an appraisal opinion done at the time of transfer. You may need this to help my office save you money on property taxes, as well as for the IRS. It's just a good practice to help you maximize your tax savings and help protect your family. Now that you know what it takes to qualify and how to calculate your Prop 19 benefit, let's get back to completing the application. To find the Prop 19 parent-to-child exclusion application, visit my website, www.sdarcc.gov, and under the Property Tax Savings section, click on the Intergenerational Exclusion Parent-to-Child link. This will take you to the web page where you can click on the Apply Now link and find the easy-to-fill-out PDF form. Also, I want to give you some quick tips to help you successfully complete the application. Tip number 1. For this application, you will need to know your assessor parcel number. Your parcel number can be found highlighted in yellow on your property tax bill. Or, if you'd like, you can go to my homepage on my website and under Assessor Services, you can click on the How to Find My Assessor Parcel Number APN link. ParcelQuest is my office's approved third-party vendor. For free, after accepting their user agreement, they'll provide you an easy way to find your parcel number. You just need to type in your home address, your street name, and click on the search button. There you will get your property details, and under general information on the top, you will see the APN and other great resources and information about your property. Tip number 2. I often get asked, who is the transferor and the transferee? The transferor is the one giving the property. The transferee is the one receiving the property. Tip number 3. If the property has transferred due to the passing of a loved one, please make sure under Section A you fill out the date of death box. And remember, you will put the same date of death as the date of transfer in the same section. Tip number 4. I get asked, who is the legal representative that's supposed to sign at the bottom of the application? Most folks think it's their attorney, but it's actually not. The legal representative may be a trustee, an executor, an administrator of the estate, or a surviving joint tenant. Now, if an attorney is also serving as one of those roles, then it could be appropriate for them to sign along with one of the beneficiaries. And my final tip is, we do not need all the beneficiaries to sign the form. Now, we do need at least one of the qualifying transferees. That means one of the parent or children receiving the property to sign along with the legal representative. All right, now that you've completed the application, we may need some additional documents, and we need you to complete the homeowner's exemption application. If this transfer was by sale or gift, we generally do not require any additional documents besides the homeowner's application, and you are ready to file. If this property was transferred by a will, we will need a copy of the letters of testamentary to process your application. If this property was transferred through a trust, we'll need a copy of your trust documents and all amendments to process your application. If this was a property received through probate, we will need a copy of the court order signed by the judge in order to process your application. By the way, I do have another great video out there to help you complete your homeowner's exemption application and start saving you $70 off your property taxes. It's on my website, sdarcc.gov, and will help you there. Rest assured though, we do keep all your documents private and are legally obligated to maintain your family's privacy, and we use these documents only to confirm that you're qualified for this tax savings benefit. If you have any concerns, my staff is happy to meet with you to review your documents in person, and will work with you to approve your application in a safe manner. If you're watching this video and you're planning ahead, please help your family avoid probate by creating a family trust. Probate court could take years. It could cost your family 30% of the value of your estate in fees. A trust is a small investment to put something in place to care for your loved ones and for your legacy. All right, congratulations. You have now signed the application at the bottom and you're ready to submit your completed application along with the additional documents that may apply to you. For the fastest processing, submit your application electronically by scanning your completed Prop 19 application, your homeowner's exemption application, along with all the supporting documents that may be required, and email it to my team. You can also mail it to the address provided in the top right-hand corner of the parent-to-child application form, or you could submit it in person at any of my 5 convenient office locations across San Diego County, and it's great, all offer free parking. You'll be in and out in 15 minutes with a copy date stamped received for your records. You'll also be notified with a personal letter from me that you've been approved for your parent-to-child application once we've received all the documents and successfully processed your application. You'll see those property tax savings reflected on your next regular annual property tax bill. Thank you for allowing me the opportunity to help you and your family take advantage of this generational wealth building opportunity, and more importantly, make your home ownership more affordable here in San Diego County using this property tax savings program. This is how we put you first with great customer service. To learn more about other ways that we can save you money on your property taxes or other services my office provides, please visit www.starcc.gov, and remember, we are here to serve you.